Bringing in Chakri Lokapriya, Managing Director at TCG Asset Management. He's here with us this morning. Chakri, good to have you. We've seen a lot of somewhat positive cues. Now we've seen Fed going ahead and cutting rates further, though there are question marks on the outlook of the future. Saudi Arabia saying production will come back on track faster than anticipated. So crude oil prices on the back of that yesterday also saw some softening. What have you been making in terms of advice to clients and adding more positions now, or probably allotting some to cash as well?
Yeah, all the points that you've raised in terms of, yes, the US, Saudi, and all the OPEC countries have done a phenomenal job in keeping oil prices under check. And so I think the longer-term trend is, again, oil trends lower. Second, the Fed has also cut rates, stating that the US economy was doing fine, but they've cut rates to support global growth, which again indicates that, a willingness to acknowledge and help global trade. So against this backdrop, then what is missing in the India piece is domestic growth. The valuations itself are actually okay. Many of the stocks across sectors have bottomed out. Then it's a question of growth, which I think is about 2 or 3 quarters at least away. And so from that perspective, we range trade rather than go up.
You spoke about a lot of sectors and stocks have bottomed out. I don't know if you can name stocks, but yeah, if you can name stocks, very good. But some sectors that you feel that one should start accumulating now.
Yes, if you look at in the financial services sector, whether it's SBI, which is trading very close to its trough valuations, whether if it's even HDFC Bank and HDFC are also trading not too much above where they were in their lowest point. ICICI Access. And then in the NBFC space, LIC Housing, Repco Finance are all trading at about 1 times book. So that is in the financial services space. In the case of autos, I think things like the tractor companies, M&M, Escorts, these companies are trading quite close to their bottoms. And there you have some amount of support because tractor sales will come back sooner versus let's say a 2-wheeler or a 4-wheeler sales. So I think these are and industrial space, wherever there is a government focus, things like L&T, infra. Now those are the names where the government has a huge push, so I'd really continue to focus on that.
Talking about autos, while some of the companies like a Bajaj Auto or Hero Moto, they in certain slowdowns they never corrected because people gave a lot of emphasis that they were cash generating machines, they were debt free companies. But now, do you think that the focus has shifted from the core balance sheet strength that they have to slowing growth, and that is why they are continuing to fall? And do you see more downside to all these counters?
If you look at all the names that you mentioned, 2-wheelers and 4-wheelers, they are, the volumes wise, sales have fallen down for the first time in Lord knows probably 15 years. And so from that perspective, growth has cyclically dramatically slowed down. So would you buy Maruti at 20 times current earnings? I wouldn't. I would stay away.
Okay.
And so it's the same thing with a Bajaj or a Hero Moto. And whenever the growth comes back, it's likely to be in the lower priced end of Maruti and Bajaj, which deserves a lower multiple.
I was having conversations with at the JP Morgan conference, and the view was that probably for the auto space, the month-on-month volume decline could be starting to trough out. But the additional kicker that has to come in to actually revive and to push sales for the auto space has to be some tinkering with GST, which we don't know whether that's going to happen or not.
Yeah, see, I think if you look at direct tax collections have been way lower. Projections for direct tax collections are also way lower. So that kind of ties the government's hands in cutting tax rates further. So now whether they'll do anything with really announcing a scrappage policy, cutting down other associated taxes remains to be seen. And BS4, BS6 has, all these issues have created lots of issues. So I think you need some short-term measures to revive growth, which is unlikely to happen this Diwali, which was largely anticipated.
The other thing also is that we've also heard conversations about how FIIs are pulling money out. But if you go to see their weightage in the emerging market basket, they're neutral to India. They've not really gone underweight India. They're still holding around 9.2% or so in terms of weightage. But they're not overweight. and that overweight will come in only once they see what they were promised in terms of growth. So in light of that, will the FII still stay out for some more time?
I think from an FII perspective, growth is very important because currencies of emerging countries, including India, depreciate over time. So if you assume a 3-5% depreciation per year, then the returns have to justify, and those returns come only with growth, which is now being cut. Now FI 20 and 21 Nifty earnings growth is likely to be cut again. So against that backdrop, I think...
What do you think they'll be?
They'll probably be FI 20 probably be 10-12%, and FI 21, well, depending on various measures, it's likely to come down from about 20 to about 14-15.
Okay, banks today are taking a knock. Yes Bank is down 4%, ICICI is down 2%, IndusInd is down 2%. Chakri is the everyone used to bet that private sector banks, whatever multiple it is, they are worth accumulating, but that certainly proved wrong, at least for a lot of these banks. What's your sense on private sector banks?
I think all these banks have corrected significantly. All the names, ICICI, Axis, Yes Bank is a separate story. They have their own corporate problems. But outside of that, no, these banks are trading at close to their trough valuations. So if the overall market corrects, indeed, they would also correct with that. But I think they're all closer to their bottom.
Okay, so probably accumulation now could
begin at with the ICICI, Axis, the HDFC Bank, and SBI kind of names.
A lot of talk about infra push and government front-loading infrastructure spending. Would you then consider, the heavy capex industry?
Yeah, L&T, for instance, is still a very inexpensive stock, and so are many of these EPC companies. And, for various reasons, post-election, things haven't picked up government spending as much as one thought they would, which was most likely to do so. And, now that monsoons are out of the way, or rather almost out of the way. And so from that perspective, I think government spending in infra is going to come back fairly strong.
All right. Great to hear from you, Chakri. Thanks so very much for joining us this morning. Really appreciate it.
Thank you.
Thank you.
Thank you.